Okay, in today's lesson, we're going to be going over companies. So, in grade 10, you've done the accounting cycle of sole traders, and in grade 11, it was the accounting cycle of partnership. Now, we're going to go over the accounting cycle of companies, transactions that are unique to companies, and recording transactions in the journals, and posting to general ledger accounts. So, let's just continue. Okay. These are some of the basic concepts that one should know when it comes to companies. I'll not be going over them. Just you can pause so that you can look over them, but I will not be going over them. I don't think if you can just read on your own, you'll get them. I don't think it's something I need to explain. So, some basic accounting rules to remember. Your assets, they increase with the debit entry and decrease with the credit entry. Your liabilities is the opposite. They decrease with the debit entry and increase with the credit entry. And then owner's equity decreases with debit entry and increases with the credit entry. And under your owner's equity, you have income accounts and expense accounts. So your expense accounts are credited, income increases your owner's equity. Those are income accounts, and your expense accounts are debited, expenses decrease owner's equity. So now let's look at the accounting cycle of a company. So what happens on the daily? Daily, you record transactions on source documents, so there could be your invoices, your receipts, EFT, debit notes, credit notes, and others. And then you record transactions in your subsidiary journals, so CRJ, CBJ, DJ, DAJ, CJ, CAJ, PCJ, and general journal. Excuse me. After you've done that, you post the journals monthly. This is what you do monthly. You post the journals to the ledgers. So that will be your general ledger, debtors ledger, and your creditors ledger. And then you prepare a trial balance. So right now, this is where we are, posting the journals to the ledgers. Then on a yearly basis or annually basis, so at the end of the accounting period, you prepare a pre-adjustment trial balance, then you do the necessary year-end adjustments, and then you prepare a post-adjustment trial balance, prepare financial statements, then closing, transfer, and final accounts. That means your trading, your profit and loss, and your appropriation account. And finally, you prepare a post-closing trial balance. So you'll see all of this as we go over everything. And we have unique ledger accounts of companies. So the trial balance of a company is very similar to that of a sole trader or partnership. However, there's some unique features in the trial balance of a company as indicated below. So these are the new accounts that you're going to come across in grade 12 that were not there before in grade 10 and grade 11. First is ordinary share capital and retained income. So these are under your capital or you're under your owner's equity for a company. So ordinary share capital, you must compare this to the capital accounts of a partnership. Basically, they're the shares that have been issued or sold, and so this is how much the value of the issued share capital is, the value of those sold shares. And then we have retained income. So income, retained income, this is in the name. Retain is to keep, and then income explains itself. So retained income is income that is kept by the company and not distributed, specifically profit that is kept by the company and not distributed to the shareholders. So you'll distribute some, but you'll keep the rest, and this will be called retained income. The profit that has been kept, retained by the company and not distributed to shareholders. The 110,000 figure is at the beginning of the year because the nominal section of for 2020 has not yet been closed off and the final profit not yet determined. So this would be like your pre-adjustment trial balance before you've done anything. So this will be at the beginning of the year. For ordinary share capital, it depends on what your adjustments say. If they say your entries have been recorded, then this is your balance at year end. If they have not yet been recorded, this is balance at the beginning. Then you have your SARS income tax, which is what you owe SARS if it's on the credit side, or what SARS owes you if it's on the debit side. So the amount owed to on by SARS for income tax may be a debit or credit balance. A credit balance is the amount owed to SARS, so it's a current liability, and a debit balance is the amount SARS owes to the company, so it's a current asset. And then we have SARS, payee, and VAT. So these were done in grade 11. So payee, that is for the employee's tax, and VAT is for VAT if you're purchasing goods from a VAT vendor and you're also a VAT vendor, all of that. And then we have shareholder for dividends, a new account. So shareholders for dividends, these are dividends at the year end that have not yet been paid to the shareholders. These amounts have been declared to the shareholders. So you have declared a dividend to the shareholders, but you just have not paid them yet. So it's a current liability, and it's the final dividends declared. Then you'll have directors' fees, which are amounts paid to directors to manage and run the company. So directors' fees, you don't put their fees or salaries under salaries and wages. You keep them separate. Then audit fees, amounts paid to the independent auditor for auditing the financial statements. And then income tax, this is the full amount of income tax for the year, which is calculated on the net profit before tax. So this is not what you owe SARS exactly for the year. This is just what for under your income statement or statement of comprehensive income. This is what your income tax is for that year, not what you owe SARS overall. And then we have dividends on ordinary shares. Dividends on ordinary shares are the amount of profits that have been distributed or paid to the shareholders. So this amount would be the interim dividends because they have been declared and paid during the year. Those are the new accounts. These are what's under the nominal account section, and this is what's under the balance sheet account section. So, okay, we have an activity here. So our activity says give one concept for each statement below by choosing a concept from the list below. Write only the concept next to the question number 1.1.1 to 1.1.6 on the answer sheet. So I'll just wait a couple of seconds. This is on the concepts. This is both things that you've done in previous years and things that you have done in grade 12. And some of the stuff is in the terms that I said you should look over and read. So you should go over that, see if you can identify anything, see if you understand anything. And the answers for these activities are out there, but I don't want you to do these activities before actually going over your work and then trying them out for yourself. So do that first, try it out, see what you understand and see what you don't understand yet, and then mark yourself, and then look over what the real answers are. Then we have activity 2. Activity 2 says a ledger account. So now we're going to be doing the ledger accounts for companies, so new accounts, ledgers that you haven't seen before grade 12. So the information below relates to Winelands Limited for the year ended 28th February 2021. So that's our year end. The company was registered with an authorized share capital of 1 million shares. 600,000 of these shares were in issue on 1st March 2020, the beginning of the current financial year. So if this is the end of it, the beginning is going to be the 1st of March 2020. Then we're told to prepare the following accounts in the general ledger. So your ordinary share capital, your retained income, SARS income tax, ordinary share dividends, and your appropriation account. Close off these accounts correctly at the end of the year. Okay. So now, first off, the information are given balances on the ledger on the 20th of February 2021 and 28th February 2022. So this is the end of year for this year. This is the end of year date for this year, and this is last year's end of year, which means these balances are our opening balances, or balances at the beginning of the year, because they are last year's end of year balances. Then we have our income tax here, and our information on income tax is that, let's first look through these balances. So you have ordinary share capital and retained income. These will be credit balances as usual because they're under capital. And then you have SARS income tax. You told the opening balance is a credit balance. So that means we owe SARS. We owe SARS 8.5, and then 5,000 as a debit balance, meaning we are owed a refundable. SARS owes us money, so we overpaid our income tax. Then we're told income tax on the 5th of March 2020, the amount due to SARS was paid via EFT. So this is last year's balance, which is opening balance. So that was paid on the 5th of March 2020. And then provisional income tax was paid to SARS for the year in 2 equal installments on the 1st of September 2020 and 28th and 24th of February 2021 respectively. Income tax for the financial year amounted to 30% of net profit before tax. Then we have shares. On 31st of August 2020, all the unissued shares were issued at 500 cents per share. So remember, we were given authorized shares at 1 million and shares issued at 600,000. So that would tell us, that will give us the calculation for how much are unissued. And then on 31st November 2020, the directors repurchased 120,000 shares at 620 cents per share from a retired shareholder. The shareholder originally purchased a share on the JSE at various times and at different prices over the past years. This is going to be important for when we have to calculate average price. And then when we come to dividends, on the 31st of August 2020, interim dividends of 25 cents per share were paid to the shareholders. The new shares do not qualify for the interim dividends. And then this part, so C above, so these were the new shareholders right here. A final dividend of 42 cents per share was declared on the 20th of February 2021. Only shareholders on record will receive final dividends. So remember, there's a repurchase of share that's happened on the 30th of November 2020, so they won't be entitled to a final dividend. And then the net profit before tax made by the company is 1,475,000 for the financial year. Okay, now we can get into everything. Now that we've looked through our information, we can start answering. So we're going to start with our ordinary share capital, ledger account or T account. Our balance at the beginning is 2.1 million and it's a credit balance because this is capital. So let's start writing that down. This is 2020 July. Don't mind my handwriting. On the 1st, wait, it's March, sorry. Thought the year end was June. It's March. It's March 1st. Then we have our balance. That's the 2.1 million. Okay, this is taking a bit long. Okay, 2.1 million. Then what happened with shares? On the 31st of August 2020, all the unissued shares were issued at 500 cents per share. And we had an authorized shares of 1 million and these were the shares issued at the beginning of the year, 600,000. So now we have to calculate what the rest of the shares were, the remaining shares were. So what we're going to do is we're going to take the 1 million, subtract 600,000, and that will give us 400,000 shares. So that is how many shares that were issued this year. The additional shares that were issued this year. And we multiply that by 500 cents. So what is 500 cents? 500 divided by 100 is the same as 5 rand. So 400,000 times 5 rand should give you 2 million. So when you issue more shares, your ordinary share capital increases. so that's why I'm recording it this side. And excuse me, let's just say we received money in, so it will be bank. And this happened on 31st of August 2020. Okay, then on the 30th of November 2020, we bought back shares from a retired shareholder. I told these shares were bought at various times and at different prices over the years. So that means we don't know what the original cost is. So when we don't know what the original cost is, which is going to be almost always, or actually always, we're going to have to calculate the average price. So how do we calculate the average price? We look at the shares that are already in issue. So we know we have 1 million shares in issue because 600,000 from the beginning of the year and 400,000 from during the year. So we have 1 million shares in issue. And what is our total value? It's the 2.1 million plus the 2 million. So it's 4.1 million and 4. So to calculate your average price, I don't have a space for working, so my workings are just going to be all over. So your average price is gonna equal 4.1 million divided by the million. And that is equal to $4.10 as your average price. And how many shares are being bought back? 120,000. So you're gonna take 120 multiply by the 4.10 to get your buyback value under ordinary share capital. And that will be 492,000 for your buyback. Nothing else happened under ordinary share capital, so now we can just balance it out. So on our left we have 4.1 million, on our right we have 492,000. So obviously our credit side is bigger. Sorry, this is my right, this is the left. This is the right, 4.1 million. So the credit side is bigger, so we just write 4.1 this side as our total for both sides because it's the bigger side. 4.1